go back to some important updates that we got from Borosil Renewables. Let's pull up the stock. Last I checked, it was still up about 3% or so. Now, the news is that one of Borosil Renewables subsidiaries, in particular, this is the German subsidiary, it has filed for bankruptcy, citing demand paucity and market conditions. The stock, however, has been holding up 4%. Perhaps the market feels a sense of relief that there's a finality to this, and now one can move on with the repair work. Let's discuss this with the company's management. Pradeep Kheruka, chairman of Borosil Renewables, is joining in. Mr. Kheruka, thank you so much for taking this call, sir. So that's exactly what we need to understand. We believe that your exposure to the subsidiary was around 350 crores. But what is the debt remaining? What happens in the bankruptcy? And to what extent can your exposure be impacted? If you could just walk us through.
Sure. Thank you for having me. The debt in the company now is from Borosil Renewables itself. We have no external debt with banks or any other lenders. So to that extent, we are not facing any hostile action by any third party. The fact is that there has been a demand constraint, significant demand constraint, because of a stoppage of manufacture of solar modules in Germany. All of these are now being imported from China. And the government has just taken office a short time ago, sometime around the 10th of May only. And I think they have so many issues to grapple with at this time that it's just going to take some time before they wrap their heads around the solar industry sector. But in the meantime, we have been losing money to the extent of nearly 900,000.
Oops, I think we've just lost that line with Mr. Kheruka. We'll try and get him back. But, that's essentially the thing that we need to understand. At least the bleeding stops, because this was a loss-making entity as well. So the market just seems to be relieved that for starters, at least that bleeding stops. And then it's a question of recovery of investment, whether that happens or not, in what form. That's something we'll try and understand.
So the only thing that I was surprised is that, as Mr. Kheruka, before he got cut off, said that there's a new government in place. And they've got lots of things to deal with. Yeah. But they're sort of getting out of this business in Germany at a time when you've got a new entity which is expanding, the fisc, etc., in a very substantial way in terms of increasing spending, state spending on a lot of things. So why now? I mean, if anything, you'd probably wait for a bit longer, or were there other circumstances as well which kind of sort of force them and force their hand? I think Mr. Kheruka is back. Mr. Kheruka, you got cut off there, sir. Please continue.
Sorry about that, yes. Swiss connectivity is not as good as Indian connectivity.
Indian connectivity. Go on, sir, go on.
Okay, so I was just saying that the government probably needs some time to wrap its head around how they want to restructure the solar manufacturing in Germany. But in the meantime, since we were losing money at this very high rate of nearly 9 crores every month, we thought it was not fair on Indian investors for us to continue to bleed in this manner. And we decided to just we decided to stop funding them. So the application has actually been made by the German managing director under German law when they see that there's no visibility of funds in the next 2 weeks, and then they must compulsorily file for insolvency, which is what they've done. And so we at this time there's an interim administrator who's been appointed, and he'll make a report. And then he's going to go back with his recommendations, which might take about 3 months. If in the meantime there is some movement and there is clarity about how the German government is going to support German industry.
Mr. Kheruka, if I can just come in, is there like a one-time write-off here? One. Second, can you kickstart this if there is clarity on the positive side?
You see,
restart rather. Sorry. Go on.
Right. So let's look at it from 2 aspects. One is the technical aspect. Technically, all you have to do is start firing the furnace. You switch on the gas and you switch it on and you're back to production. Technically, that is the story. We have a full complement of workers there who are experts. They know their job, and they are very dedicated, strong people. I have a lot of respect for the workforce there. They would be available, I believe, at short notice to resume work should the circumstances allow them to do so. And as I've seen before, the investor is looking at visibility. If the investor sees visibility, there's no shortage of funding. So I suppose that this is going to follow the same pattern. So we do have a 3-month period in which we're going to see what kind of a response the administrator is able to generate. Right now, it's outside our hands, number one. Number two, the clear thing is we've stopped funding this. I mean, in future, any demand for any money will go to the German government and not to us. So we have sort of we have ceased to be responsible for the expenses.
All right, sir. That point, will that be a one time that will be seen in one of these quarters? If yes, what could the quantum be?
See, our exposure is $35 million euros altogether. We have funded about 20 out of this was 27 million was funded by us. So the exposure is not something which I can speak about now because we have sizable assets. There's a very large plot of land. There's a very strong construction. There could be other uses to which this property could be put. And there might be customers for the property itself. There are, of course, plant and machinery for which we could be one of the customers. That because a lot of it is brand new. So it's not necessary that the entire amount that we've invested will be written off, but this is just something on which I simply cannot make any comment at this time.
Okay, all right. So I think the street views it as a positive that now you can focus on the core India business where you have some protection as well. And the margin difference has been substantial because the entity that we're talking about in Europe is loss-making, while India business is expected to improve from year on. So purely for the India business itself, could you tell us what is the realization difference if I look at it, on an average today in comparison to, say, Q4, very, very roughly? And what kind of a CAGR can you look at on the India revenue from year on and margin trajectory as well? I recall you doing 30%. That came down to mid-teens, but that's expected to improve as well. Please go ahead.
Yes, please. Margins are definitely on the way up. Demand is robust in the country. We are focusing on maximizing production, and we are focusing on
again, we've lost
demand
that line.
and getting ready for that. So the picture here is very positive. Yeah.
Mr. Kheruka, just a...
Are we back?
Yeah,
Yes,
we
sir.
can hear you. Please go on, sir.
You were giving us a number. What kind of revenue CAGR can we look at and margin trajectory from year on for the India business?
The margin trajectory is only going to improve. It should not deteriorate from what I can see. The demand is very robust in our country, and we continue to meet the demands of our customers. So we're looking at a 60% expansion, and this will allow us to devote our full time to this. In the past, we have been devoting time to things that were not productive. And I must take out time to comment about the government. Our own government is very proactive. And when I see the difference,
Mr. Kheruka?
We are headed, yes.
Yeah, sorry. Paucity of time, so just trying to squeeze in one last question. So you are, since the company is filed for bankruptcy, your German subsidiary, you ceased to be promoter immediately, and this was contributing 22% to your revenue. Will that be made up by the India business this year itself? I mean, in the interim, suddenly the 22% is gone, right?
Yeah, the revenue has gone, but the profits have gone up.
Yeah.
I mean, to the extent maybe nearly 27 crores per quarter is going to rise. So that revenue was not giving us anything. It was taking it up.
Sure.
They won't lose money on sales now.
And 27 crores of additional profit every quarter. That's an important, of course, something that your shareholders will like.
All right, Mr. Kheruka, we'll leave it there, sir. Good speaking with you on a patchy line, but I think on a firmer line next time you're here. Look forward to our next conversation. Appreciate you joining us here for that chat. We'll